All right, welcome. We're on track for another exciting Monday. Game plan for today. We are recording this session just to let you know. Most of it's going to be emphasizing the annual report project. We want to make sure folks are comfortable with the content and the needs. Any questions today and or extra credit for today? Yes.
I have a question about the Excel extra credit today.
Okay, the Excel extra credit.
So do we do that all do the grades on that? Like we do that one a little bit.
The Excel assignment, you had about 3 in the actual homework. And then the bonus or the extra credit is 3 points if you complete them all. If you do, it's not going to adversely affect your homework grade at all. Okay, so if you blow away 1 or 2 assignments, don't worry about it. If you blow away 3 or 4 assignments, you're not going to get the full extra credit, or maybe any extra credit, depending on how bad you blow them away. So the extra credit's there, it's for you. Excel's a bare bones minimum expected when you graduate. The Excel is 3 points bonus, the Tableau is 5 points bonus. So I don't know if you had a chance to take a look at the Tableau extra credit options, but those are something worthwhile seeing as well. And as you know, maximum of 10 credits is available, but it will not adversely affect your normal homework grade. And again, depending on how well you do, if you do pretty well, most of it, you get it mostly done, 3 points, good to go. If I had somebody in there that kind of entered, looked, and tried to fool the system and said, yeah, I did it. No, you didn't. So that's not going to get you any extra credit. So just be aware that there's a scale there. Chances are you get 3 points on the Excel, you get 5 points in the Tableau, assuming you complete them all to the best of your abilities. They're not going to be perfect, or they may be perfect. That's even better. But you don't have to be perfect to get full extra credit. You do have to submit your extra credit verbally in class. You got to talk about it, what you learned for the benefit of those that may not have done it, as well as do the 2 or 3 paragraph write-up. And the online classes are going to have to do a video for the extra credit as well. So that's how it fits together. Make sense? Okay. And again, this Wednesday, the 17th, 5:45 is dinner, 6 o'clock is the actual program, although people can be eating while people are presenting. We have at least 3 presenters, possibly 4. We're still confirming. Someone's trying to get out of work on a Wednesday night. But it's going to be a career night. It's going to talk about internships. It's going to talk about LinkedIn. And ideally, we'll be talking about interviews given time and availability. We also have that 5-day challenge opportunity that starts today. There's Amazon gift card prizes, $20 prizes with a $100 grand prize. To get the grand prize, you've got to finish the exercises. You've got to show up. There's a live session today at 5:30, Monday. Live session this Thursday at 5:30. And a live session next Monday, which is a $100 drawing for the grand prize. You don't have to be present to win the $20 certificates or some of the other prizes, but you do need to be present to win on Monday, a week from today, for the $100 prize, as well as complete the exercises. Even if you get started late, maybe you can't start until Tuesday or Wednesday, you could still be eligible for Thursday or Friday to complete the activities associated. It's a 5-day challenge, 10 to 20 minute video, 5 to 15 minute exercise will enhance your LinkedIn presence, enhance your LinkedIn profile. I jump into the Facebook group right away at the LI 5-day challenge group, but you can also go through the tiny URL and get that 10 steps to getting hired guide. 3 or 4 page document that has 10 insightful steps on getting hired, job plan. The emphasis we're going to be discussing is our annual report project. And that's the real reason for recording this particular session. I do have some more details on using Edgar and some of the pre-recorded videos, and we're going to walk through some stuff. Then we're going to finish off chapter 10. And I do want to mention the final exam. There will be a review session like we've had for exam 1 and 2, where the jury's still up whether we're going to have the 3rd exam. So yeah, we're having quizzes. We may just have the exam, those 2 exam standards or exam grade. Just a quick survey. How many would like to have a 3rd exam to either pull up some of the first 2 exams, any takers, or how would you rather have, let's not do the 3rd exam, don't want another test, I got 2 already under my belt, and I'll I'll go down that track. Any preferences on that way? The other class was a flip of that. Okay, jury's still out. We'll see about the third exam. I don't want to give you extra work, but the final is cumulative. All chapters 1 through 13 are included. So even if we don't have a third exam, the material, actually the final would emphasize some of that a little bit more, but all material from day one is included as part of it. And a lot of materials that we've had so far, the reason we jumped chapter 13 earlier in the schedule is for our annual report budget. So I want to go ahead and take a look at the annual report project and have a walkthrough with you. Let's go through. So you have this available to you. You can see it on Blackboard. This is the project. Hopefully all of you have seen it, started using it, started applying it. We've talked about it in class before. So bottom line, written and oral presentations. The online folks will be able to record their presentations or need to. They're also welcome to come to class and present them live. You will have the option of being recorded because you will do a live presentation here. Additionally, you'll have a write-up. The write-up is due the last day of class. I think the last day of class is Monday, December calendar. 2nd. So the last day of class is on a Monday, and that would be December 6th. And on December 1st and 3rd, we'll be having presentations. That's the 3rd, your Monday, Wednesday class. So it'll be the 1st, the 5th, and you'll have the option of the 30th as well, the 29th as well. So the 29th, the 1st, and the 5th will be what you have available and be able to present on. Those class days, the earlier you present, the more lenient I will be. But you do not need your final written paper submitted by the time you present. The last day of class is when, that Monday is when your actual final paper is due. I'm going to actually encourage you to present earlier and not submit the paper at the same time, because you might discover some changes. You might discover some things you want to edit. You hopefully will find no mistakes, but some additional insights. So there will be 2 grades. By the way, the final exam is about 25% of the grade. The project, 12.5% oral, 12.5% written. So that's about 25% of the grade. So half your grade is in these final submissions right now. So you can pull yourself way up, which typically will often happen, or you can pull yourself way down, which hopefully doesn't. Things that direction you can go. I do encourage creative presentations. Yeah, you can use PowerPoint. Not a problem. You don't want death by PowerPoint. You don't want to be too busy on your PowerPoint. You're not going to have slides with a balance sheet and slides with an income statement. You're going to extract pieces and parts of that to make it interesting. So if you have more than 20 words on a slide, you start getting lost. If you have more than 10 numbers, the same thing happens. So you might have graphs and charts. You'll have it in your paper, and you'll have it on your PowerPoint in your presentation as well. The ultimate goal, begin with the end in mind. 7 Habits of Highly Effective People. Habit number 2, Stephen Covey. Begin with the end in mind. You're answering 2 questions. Would I consider working for, or would I consider investing in this company? Everything you do should be used to support those 2 questions. And they don't have to be both yes or both no. One could be yes, one could be no. Okay. I wouldn't invest in them. They're struggling right now, but I'd go work for them because I think I can make a difference. Or I wouldn't work for them because they're in the middle of Michigan, and but I'd invest in them because they're a pretty cool company. So what it is, defend your position, and that's what you're going to lead up. You want to answer these 2 questions by the end. If you don't answer the questions, if you don't have a slide at the end saying yes or no, assignment's not complete. That's what we're asking. You need to address why or why not. Let's go back and outline where we're headed with this. If you want to use Prezi, that's great. I've had students do that. Prezi is a great tool. I've had students do no technology. I had a student do Cheesecake Factory with a menu, with financial data, with financial information and recommendations. I had somebody do a Disney interview with Mickey Mouse. It's kind of cool, actually. You can do a board interview with a board member or a president or CEO. Do a Mark Zuckerberg interview with you. You can also create a game, a la Jeopardy, a la somebody do a board game. It's actually pretty cool. So those are things you can be creative. Again, you're not married or tied to technology, but I suspect technology will be the most popular method of presenting information and getting the point across. As far as, I don't want you reading your report. You get up here and you start saying, this is this project I did, this is what I did, yes, and this is what I found. You're not reading a report. You can take some notes. I'm not going to penalize you for having note cards or having reminders, but you can probably use the PowerPoint or some other tool, even Prezi as a reminder tool. But I don't want you getting up here and reading, because I can read it, you can read it, you'll have a project. It's public speaking. Now, people fear public speaking, as you know. Some people fear public speaking more than death. Hopefully, I'm not trying to scare you right now, but I want to find out what you have to say and how you're going to say it, because that's key. Now, I will be recording these if you like. That is an option. I would actually encourage it. It's always nice to find out, what are my go-to words? Am I an or kind of guy? Am I okay? And filler words. I'm actually pretty good on filler words. Although my go-to word is and. I'm quite aware. I tend to and I have a lot more and that's something I have been conscious of and I need to work on. So if I'm able to see my own presentation, that would highlight. Also your hand motions. Any annoying, do you jingle coins in your pocket or just keys in your pocket? Or your hands in your pocket? Or are you expressive? Are you monotone? Are you changing tone? Those are all good things to learn about yourself. So if you want to be recorded, and I would encourage it, you don't have to be, that would be something that we can do and will do for class. As far as the paper should be 5 to 10 pages of content. The APA is the ideal format. I'm not going to be a stickler, but ideally 5 to 10 pages of information plus appendices, plus graphs, plus charts. You will refer in your paper to that content. Someone said, well, if I can do everything you want in 3 pages, I let them know I would retire, because I don't think you can do in 3 pages all that unless you use a 6-point font and need single space and you go down that track. And he was just kidding, I suspect. Actually, he wasn't kidding, but I was. The idea is, though, that we want a convincing, a cohesive communication of why you chose the conclusions you did based on that content. And it's going to take 5 to 10 pages to do that, including all the other stuff we're doing, background on the industry, background on the company, other information. So you'll have tables, charts, graphs, all geared towards extracting data. Now, you're not going to have all those charts on your PowerPoint. You're not going to have all those graphs, but you probably have some on your PowerPoint or whatever presentation method you use. Because if you do that, again, slides get too busy. Typically, one budgets maybe 1 minute per slide in a presentation. Sometimes I've heard it down to 20, 30 seconds. Sometimes I've heard as more as 2 or 3 minutes. The average is kind of a minute per slide. So say, wait a minute, I've got a 5 to 7 minute presentation. That's going to be 5 to 7 slides. Now, maybe it's double that, 10 to 14 slides, because I'm not going to be talking a lot, but I want to get some information across. Just be aware, there's no substitute for practice as well. It's good to practice presentations. Bibliography is going to be handy, but again, we're answering those 2 questions: would I work for or invest? And the analysis needs to support that. Yeah, Sam.
So do we lose points if we-
You do not lose points if you go over the time limit. You do not lose points if you go over 10 pages. So I'm not going to cut you off saying, I'm not reading anything past 10. All right, that I know folks that do that. I want you to get the point across and I want you to practice. Now, if you go to 12 or 15 plus appendices, so be it. If you do 30 seconds or 2 minutes, I'm probably going to, as a presentation, I don't think you're going to cover enough ground to really warrant a good grade, let alone an effective presentation. But and we'll give it a small class. You really end up going 20 minutes. No penalties here because we can get across. So get what you have to do to get the point across and defend your conclusions. And you're going to be responsible for reviewing your classmate's presentation. My online classes, they need to review somebody else's presentation and make comments. That's part of the assignment. You don't have to do it online, but you do need to do it in class. So you do need to ask the questions of your classmates when they're presenting that may get raised, or things you say, that looks interesting. Would you elaborate? Or I'll tell you now, if you want to plant questions with your classmates, that's okay. All right? That's nothing wrong with having some good questions, because that will reinforce the point you want to make. That will enhance your presentation, not take away. So no harm, no foul in planting questions that will accent the things you want to talk about. So in your cohort, you might say, you know what? Yeah, cohort mate, help me out here. Here's 2 questions I think that would be appreciated. And that's going to contribute not just to the time, but to the content and defending. So, and then someone says, well, how do you know if we don't use Grammarly? All right, how are you going to test it? I'm not going to ask you to sign a piece of paper. I certified that I use Grammarly. I'll know. All right, I'm not clairvoyant, but I know the typical mistakes. There's a bunch of grammar stuff that's in the syllabus. You know, there, and there. 2, 2, and 2. Using words like irregardless, which isn't even a word. The word is regardless. Okay. But people use words, don't grammar check it. Now, Microsoft Word will do some checking for you. Not as powerful as Grammarly. I use Grammarly when I'm doing a mass mailing to 4,000 students or to 6,000 professionals. I'm going to check. There's a couple of words and I catch it every time. Even my dissertation, every time I reread it, I caught something. Every time I did a Grammarly, I got something else. But still, we're always 90% done. When I send a letter to Dr. Carter, president of this institution, do I want it to be perfect, or perfect as it can be? You bet. I'm going to use Grammarly myself. So I'm asking you to use it as a tool. And yes, I will know if you don't use it in that conversation. It is a letter grade affliction, because you really want to make sure you got this run-on sentences, you got the grammar that goes with it, the spelling that goes with it, content, and it doesn't mean that some of the warnings you can disregard. The obvious ones, there, and there, you don't want to disregard. But some of them, they may say, you know what? And frankly, if you don't do it, I might just go ahead and test it anyways and see what comes up. So those are things that I'll know. Don't you worry. I will know. But please do use it, and it's good practice for any papers you present in any professional environment. And it is free. So we're going to select a publicly traded company, preferably in the US. The main reason we prefer the US is because you have access to full financials for any publicly traded company via what platform? EDGAR, the SEC's EDGAR. We're going to go into that in a few minutes. Can you do Adidas in Germany? Sure. SEC doesn't have it. Can you do Honda in Japan? Yeah, it's in yen, but the ratios are going to be the same. The percentages are going to be the same, just in yen, not dollars. But you can't have access to that through the SEC's EDGAR. That's not to say you can't do them, but I'm encouraging you to pick a publicly traded company in the US. Then you might pick a company in the US that's not publicly traded. You might look at an SC Johnson. You say, oh, Windex, they make Windex, they make Lemon Pledge, they make a whole bunch of cool stuff, but they're not publicly traded, so I can't get their financials. Or you might say Coca-Cola, same thing. They make great toilets and sinks and plumbing supplies, but they're not publicly traded. Yes.
Third question, I was wondering this kind of issue on that part of mine.
Sure.
Is it possible to go in EDGAR and find a company with annual reports, but the reports themselves don't have all the information?
2-word answer. It depends. I know you saw that coming. Okay. Usually that's not an issue, but sometimes a company goes private. Okay, maybe Wendy's gets bought out by a Canadian concern, or another company gets bought out and they were public for a while, then they go private. Dell Computer was public, they went private, back to public. Those are things that you may not get 2 years or 3 years or multiple 10Ks out of that because of circumstances. So if they're publicly traded and they haven't changed status, you're pretty good at finding it. If they change status, leverage buyout, somebody goes private instead of going public, you may not get all the data you want. So that's a good idea. I'm glad you're checking and saying, hey, here's a company. Well, here's the data. I got 2 or 3 10Ks. I can work with this thing. But if you get one 10K and you look higher, and it might have been they changed their name or they were acquired. So maybe you go to the predecessor company and say, oh, well, they acquired, they merged and they changed their name. Well, now you get 1 year data. But now you can go back and say, what were they before they merged, or before they acquired, before they made the change, and or reorganized under bankruptcy, or whatever else is going on. Then you can go back. Now, usually with bankruptcy, you'll get past anyways. But changes happen all the time. So I can't say with 100% guarantee if it's publicly traded, you get all the data you need. You might miss a couple of years. You might be transitioned. So great question. That's why I urge you to check it out, scope it out, do a little preliminary work before you start spending all your time saying, uh-oh, I can't do this is what I wanted to do. That answer the question? Good question. Thank you. All right. You don't have to use the hard copies that you got mailed because they won't be the most recent, most likely. You can use them as just a format kind of to read through, but you're going to want to read a 10K cover to cover. You're going to want to get at least 2 10Ks. Again, average assets, balance sheet's only 2 years, income statement's 3. You take average liabilities or average assets, you just now busted that. You got one ratio calculation. You got to go to the previous year's 10K, which sometimes doesn't agree in that year. There's sometimes changes or 10K amended. You got to go in there and double check, but you will see that you need at least 2 to 3 10Ks to work with, just for your company. You're also going to do comparators. So you need a 10K or 2 from other companies in the industry. And by the way, Google's real good. Someone was saying, trying to, who's competitors for Michaels? This last class we did this, so Google, who are competitors for Michaels? And they came with Joanne Fabrics, they came with Hobby Lobby, they came with other companies that were in the same family. Be careful of who are your competitors. You might say, well, Google or Alphabet was a competitor of Microsoft, who was a competitor of Apple, and you realize, well, they're in 3 different industries. And now Alphabet's more of a conglomerate, they're doing a whole bunch of other things too. Amazon's doing a whole bunch of other things too. eBay is doing a whole bunch of other things too. But their primary industry, eBay is more competitive with Sotheby's than it is with Amazon. Although eBay has a division doing all kinds of things. And Amazon Web Services has other things they're doing besides the retail side. So be careful of who you select as competitors. But let Google be your friend. There are other tools out there to find competitors as well. So you're going to be reading, and we are going to be using Edgar. You're going to be reading annual reports cover to cover. Yeah.
One quick question. I don't know, but, so whenever I look up, I have a book line.
Okay.
I've already looked it up. I started looking at 10Ks and everything.
Great.
So there's like a 10K-A.
10K/A for amended 10K.
Okay, and then there's another one that's a 10K 405. What is that?
I have no idea.
Okay. I didn't know. Like, I've just been seeing like, because I mean, you do like the file type.
There's different filings. There's 8K, there's a 10Q, which is a quarterly. Anytime a major stockholder or an officer in the corporation buys a bunch of stock or sells a bunch of stock, then you disclose it. That goes out to the SEC. A lot of communications goes to the SEC. The 10K, and actually you probably want to use a 10K/A, the amended, which is, we submitted it, but we had to revise it. Our auditors got something, our own staff got something. You know what, we screwed up, our inventory was wrong, and it's going to affect everything. So we have a revised or edited 10K. That's the 10K/A.
Yeah.
I'd love to find out what the 405 is, because other than a highway in California, but I want to know what, I would take a look at it, and that'd be an interesting conversation piece to examine. But chances are, I know sometimes the amended doesn't have any financials. It's amending something else besides the financials. So maybe the 10K/A is not what you're going to use. You're going to use the original 10K. But you're doing your due diligence, you're doing your research,
Yeah.
you're saying, scoping out the company, and that's great. And if, by the way, if you have any questions as we go, let me know. Email, set up a Calendly meeting with me, come on to office hours, whatever it takes, weekends, evenings, let me know. Here to help any way I can. Or if you get some questions as you're going. My 24/7 offer is good. You can call me 24/7 because my phone sits in my office when I go to sleep. All right. I was up at 4 o'clock this morning when Bob wanted to go out, and then I took another hour to do some work. So had you called me then, I probably would have answered my phone. But otherwise, feel free to call anytime. access, you have my phone number, 608-446-1000. It's on all my emails. But let me know what I can do to help, because this is the core. Why are we doing all this stuff? It's not just for accounting 101 or 201. It's accounting and finance and economics and your capstone and management and marketing and business in general. This is your professional and personal development. I'm also going to share, you can differentiate yourself from 98% of the competition interviewing for a job by reading their annual report. Let me repeat that. You read somebody's annual report for a company that you might be applying for a job for, 98% of the other folks won't. They will look, Google search, cool. Website, great. What do some of the analysts say? Maybe. They won't read the 10K. They won't have the intimate understanding. They won't do any analysis of a financial statement. And if you're applying for a privately held company for a job, look at the publicly traded version. Look at Best Buy if you're looking for a local home electronics store or a regional chain. They're not publicly traded, but Best Buy is. You'll get the industry terminology. You'll get to see the trends that they have in their industry and how effective that is. You're going to be able to say in an interview question, well, I noticed folks like Best Buy, they're competitors of yours, correct? So they had sales that jumped up 10%, but the profits went down about 5%. Did that happen to you? Is that something, is the market flat, growing? How do you fit in? And without giving me any inside information that you don't want to tell me, but I want to know, I'm curious as a company, because I want to contribute to the success. I want to know how we're doing. If this is going to be my company, I'm sure you want me to know too. So that's a more intelligent question than, so how's business? Okay, that's a little general, not a bad question to start, but you need to do a deeper dive. That's a powerful tool in the toolbox. Now, when you read cover to cover, if you're going to want to work for Ford and you read GM's and Tesla's annual reports, that's going to be pretty powerful too. So competitors, the analysis that goes with that, and you can gain some pretty good insight in the industry by looking at these 10Ks. You're also going to see mandated on 10K is risk factors. We'll talk about those kind of things in a second on your complete review. So you're going to read it cover to cover. You read the CEO or the president's letter. That'll be fluff pretty much. You might say, wait a minute, sales are down, profits are down, but the CEO is saying how wonderful they're doing. Disconnect. It happens. And that's something that's the CEO's job, is to put their best foot forward. Auditor's report, the opinion letter. Did we say unqualified or qualified is better? Qualified opinion or unqualified opinion? Qualified feels better. This company is qualified, right? Bad idea though. Unqualified meaning no exceptions to gap. Qualified is, in our opinion, the books are cool, except for going concern. I think they're going to be closing the doors in the next 12 months. Or they didn't handle fair market value versus historical cost. They didn't put fair market value. We believe historical cost gap is the appropriate gap presentation. We qualify the opinion. You read the opinion letter, it'll be very clear. The letters are pretty standard. We examine the books of XYZ company for the fiscal years ending 2019, 2020, and the books are cool in accordance with gap. They don't use books are cool, but you get the idea. They will say, except for, that's a qualification. That's usually bad news. So those are the kind of things. And the amended return, we talk about amended 10Ks. Sometimes they get amended when you change auditors. Maybe an auditor disagrees with the company. They disagree strong enough that they don't want an adverse opinion or qualified opinion, but go shopping for another CPA firm to do their opinion. And that does happen as well. But that also, the new firm has to speak to the old firm and can't always get off hook with that one. All right, check the graphics, check the formatting. Information presented, does it inspire trust, accuracy, reliability, and excitement? Now, don't worry if the 10K is dull and boring with no charts. Some of the annual reports you have physically in your hand are pretty cool because they're like a book. They've been edited, they went to the marketing department, and those are for fluff for people that are going to invest in the company. 10K is a little drier overall, but what about the content? You've read it cover to cover, what do you think of it? Number 3, report anything that surprised you as you were reading through. including the footnotes. Now, you may not be aware of everything in the footnotes, might not be crystal clear. Frankly, to me neither. All the notes on GAAP that go through in a footnote, I know probably a little more than you do, but you know more than you think. You've been exposed to most of the terminology you're going to see in footnotes. You're going to see inventory and inventory methodologies. You're going to see receivables and allowance for doubtful accounts. You're going to see bond issues. You're going to see how they advertise premium discounts or when they're due or those kind of things. So you're going to read the footnotes, you're going to read the content, you're going to read the full annual report. What jumps out at you? There are things in there that you're going to say, they just told me about how everything can go wrong. They're worried about pandemics. They're worried about being nationalized in a foreign country. They're worried about climate change and water supply and electricity access. They're worried about labor force and getting good people. They just give me all these things that they're worried about. And that's mandated on 10K by the SEC. But it's also interesting to be aware of those kind of items that they discuss. So anything surprised you? Also, if something is missing, I would love to see how long somebody was lasting in my company. What's the average tenure of an employee? 10 years, 12 years, 2 years? What's the turnover rate? I would love to see numbers of employees or revenue per employee. I would love to see diversity, equity, and inclusion, DE&I. Maybe I look at the board of directors and they're all 50-something white guys. Or maybe they have a diverse board. And maybe that either surprises you or encourages you or discourages you. Whatever it is, what jumps out at you? What's missing? What other things might you like to see? Number 5, you're going to give a background on the company and the industry. And will that go into your presentation? Yeah, give us enough information as a class, because we may not all know about the cracking process or the oil industry and the refinery process and gas in, gas out, diesel, how it's all made. You might want to give a brief overview of the industry, what downline, upline, whatever's going on. You also want to keep in mind the perspective of will support my conclusion from anything that you're presenting. You also want to do your Google searches. You want to read articles, what the gurus are saying, what people are saying. And then we're going to use Edgar. I'm going to do a quick demo of Edgar again, just so we may be on the same page. You're also going to want to look at 3 other companies in the industry, as well as get the latest financial from your company. And you probably want to get your latest 10Q, not just 10Ks we've been talking about, the annual reports, 10-K, but maybe the latest 10Q and see if there's any changes in comparison with previous years. You say, wait a minute, this reinforces their 10Q just told me this is the best quarter they've had ever. The numbers look good last year, but now this is just, it's going to be better this year. So that's kind of cool. That's kind of powerful. Perform individual ratio. Here's our chapter 13 stuff. Calculate a minimum of the following financial ratio for 3 years, current inventory turn, receivable turn, minimum of 3 trends. So horizontal analysis, trend analysis, vertical analysis, common size analysis, and ratio analysis. Now you might say a company doesn't have inventory, or a TV station, radio station. We don't have inventory, and you're right. So do you have to do inventory turnover for that? No. I would not encourage you to choose a company that doesn't have inventory just so you don't have to make that calculation. Same thing, not all companies have receivables. Some restaurants are pretty much cash basis, or cash in. They may not have a lot of receivables. My tab at McDonald's, I can't do a drive-through, so I just put it on my tab. Probably I don't think you can either. But you get the idea of, yeah, the receivable turnover may not be as meaningful in some of these companies, or the inventory turnover may not be as meaningful, or not even exist. Banks, yeah, the bank's inventory is money, but that's not called inventory. So you're not going to have inventory in the bank to work on. So you may not be able to calculate some of these ratios. Compare to company standards and your own company, prior years, and other companies in the industry. That's going to give you some good information. Optional extra credit, perform a SWOT analysis. What does SWOT stand for? Strengths, weaknesses, opportunities, and threats. Another analysis, I'll give you another bonus analysis. If you ever heard of the BCG, Boston Consulting Group, they have a 4-quadrant analysis called the BCG matrix. The term cash cow came from this BCG matrix. The term stars, dogs, and question marks are also part of the BCG matrix. There's some nice summaries online. You can 4-quadrant analysis on products produced by a company. Anybody heard of BCG matrix before? You'll probably see it in marketing, you might see it in management. That's BCG matrix is something we do a little digging on. It's a quick read. If you just go online, you'll see the pictures. It's kind of neat. And finally, you're going to answer the question, would I consider investing or working for this company? And you can say yes, yes, no, 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 yes, yes, no. And you can say it depends, but then you better come up with it depends on what. Fair enough. I'm going to do a quick jump into Edgar, but any questions so far? Is this helping at all? Are we on the same page? Making sense? I mean, it's all there. It was written down there. But yeah, I agree. Good. That's fair. Go for it. One company focus, you do prior year stuff, you do current year stuff, and then you do 3, and I say 3, at least 2 or 3 companies. You're going to do some preliminary analysis. You might highlight some of the things when you do your vertical. You say, oh, their balance sheet is 40% inventory. Let me focus a little more on inventory. Or you might say they've got 90% debt. Now you might say 90% debt, terrible, a high risk company, highly leveraged. Or you might say 90% debt, terrific, high risk, high reward. That's a personal preference. And you need to defend that. But I don't want you to come in and say 90% debt, but they're not really heavily leveraged, not a lot of risk. I want you to understand the concepts you're presenting. You say, I've had people say, my inventory turnover, great, I have an inventory turnover that is accelerating. That means my sales are growing. Doesn't mean your sales are growing. Inventory turnover is cost of goods sold and inventory. And it just means, well, my cost of goods sold numerator, yeah, if my inventory is staying the same and my cost of goods sold grows, yeah, it's growing. But if my inventory grows or my inventory just shrinks and my cost of goods sold stays the same, that doesn't mean my sales are growing. So long as you understand what you're presenting, that's 80% of the battle. I don't want you creating falsehoods based on the data. So I've heard people make all kinds of things interesting. I look at that and say, fascinating. Let me have a conversation. But I want you to understand what you're talking about. And that's why chapter 13 was jumped earlier in the semester, halfway through, rather than waiting until the end of the semester. The other thing, when we look at the actual data that you're analyzing, I've had too many people say, my debt to asset ratio is 1.0. How does that happen? Well, if your debt equals your total assets, it will happen. That means you have zero equity. And some companies have zero equity, some have negative equity, most have positive equity, which is a good thing. But what they probably did more likely is they took total liabilities and equity divided by total assets and came up with 1.0. And they didn't realize debt ratio, you don't need equity, right? So you're looking at that saying, okay, I mean, those things can jump out. Or you look at profitability, net income percentage, 29%, great. Except we're a retailer, food retailer, a supermarket. That's typically 2 to 5%, maybe 7 or 8%. Your high-tech company or bank, you might get to 25 or 30%. But that's not happening for a typical retailer. So those numbers jump out. You have 110% debt to asset ratio. Well, if you have negative equity, you can, but typically not. So those are things that you should look at. You should get comfortable ballparking this stuff. Look at an eyeball. And if you look and say, what's wrong with this picture? It may be wrong. It may be right. They may be an exception. They may be out in the end. But I want you to have that critical mind of analyzing, saying, there's something, what's missing there? If you want to ask me, by all means, don't feel like you're on your own. If you want to reach out and say, Dr. Scott, can you check some of my calculations here? I was going through this. I double checked, I triple checked, I quadruple checked, and something smells, doesn't pass the smell test. And if that's the case, we'll talk about it. Then hopefully that'll be a learning experience and say, oh, okay. And sometimes it's right. Sometimes you've not done it 4 times, and you did it 4 times right. Sometimes you've done it 4 times wrong. But that's okay. That's why we're here to figure it out. You're not gonna get fired. I don't fire you in my classes. It's a good thing. All right, we're gonna do a quick jump over to Edgar. So let's go ahead and let's take a look at Edgar for, we'll do a quick search on Edgar. Edgar search. And filing and forms, SEC, I'll jump over there. And then I'll scroll down, search for company filings over here. And then I'll jump down, and search by company or fund name or ticker symbol. You know the ticker symbol, that's going to be the quickest way to jump something. But if you don't know the ticker symbol, and then give me a company name that you might want to take a quick look at. Any companies? What's that? Ford. Ticker symbol F, right? I'm going to type in Ford though, just for kicks. There it is. Ford Motor Company. That's from Ford Industries. That's Ford. Ford Motor Company is F. That's the name. Yep. Okay, so we'll load it up. Now in the upper left-hand corner, we got this thing called classic version. I said that's what you want to use because it's going to get you this Excel spreadsheet pretty quickly. I'm going to go to classic version. And what did we say the form we wanted was? Filing type 10K. If I do that, I get nada. What do I need to do? Put a dash. Like the syntax. Okay, there we go. Interactive data. This was from February 2021. 9 months ago. This is February 2020. Let's go into interactive data. Now I can jump into interactive data. And I can go to financial statements. And I get all these statements right here. And we said cash flow, consolidated income statement, statement of comprehensive income. That's not the one we want. We get a balance sheet consolidated. Let's go into our highlight right here. If I go here, let's look at balance sheet. So I click on balance sheet. There's 2 years of data for balance sheet. And if I go further, I can say, well, there's cash, there's total assets. I'm going to jump into view Excel document. That's where you want to pull. And that's why I emphasize Excel is a bare bones minimum when you graduate. I'm glad the first questions you had in class today were about the Excel extra credit, because Excel is a powerful tool. 3 points of Excel extra credit, 5 points of Tableau extra credit. Those are both great tools. One of my students, and I will say not my strongest student, was able to find a job because he knew about Tableau just from past stuff that was covered. So I'm going to go ahead and click on View Excel Document, and I'm going to here. So I'm going to open that up. And then once I get that document, I'm going to have a series of tabs at the bottom of the screen. Those tabs are going to each one of these statements. So I have a document entity information. I've got a consolidated statement of cash flows. I've got a consolidated statement of income, cash flows. Let's keep going to the right. Statement of cash. I got a consolidated income statement. Let's see how Ford did. If we just want to do a quick summary, they've been nosediving in sales from 160 billion down to 156 billion to 127 billion. They have cost expenses, income or loss. They've been running losses the past 3 years, and the losses are getting bigger every year. I don't know if I jump at the opportunity to work for Ford, even if I like the 150 or the 250, right? So I'm going to go into their balance sheet, and I'm going to enable editing. So I'm on this, all these forms are here in Excel. So I'm going to insert a column. So we'll go here. Oops, I can't insert a column because I didn't enable editing. No insert. So until I enable editing, and now I try to insert a column, it will let me do it. So don't forget to enable editing. And then I'm going to go through here and say, I want to do a vertical analysis for 2020. So I'm going to take equals that number divided by what? What percentage is my balance sheet is cash? Cash equivalents. My total assets, bingo. There we go. And I get 0. So what do I need to do there? I'm I'm actually going to change that to a column to a percentage. And I'm going to move my decimal over a little more. So I get 9.4%, single decimal place. Now I'm going to edit this cell, make that absolutely positively $V, $18. It's not going to change 9.4, but when I copy this cell down, Control C, I could click and drag with the square, go down to total assets. Notice my total assets is 100%. That's my 100% number in vertical analysis. But I now have all these wonderful percentages. And I look here, I'm saying, oh, receivables, financing, that's 16% of my balance sheet. I jump over here. I have best operating leases, 10%. By the way, you're going to find leases to be a big part. Net equipment, sorry, net property, and refer to note 13 or 14%. But I've got non-current portion of debt, looks like all kinds of outstanding debt, 20%. 43.7% of current assets. Notice it doesn't say total liabilities. Take that back, go down to liabilities. And I'm going down here. I can do the same, copying that formula down here, and I'll do that. Same total assets, it's good to go. Equity, stock, total assets, SB, equity, different asset, liabilities. Down here. But again, I can jump down here and look at current liabilities 36.4, total liabilities 88.5. You'll notice that my total liabilities and I do have positive equity. So this gives you an idea. Liabilities and equity is 100%. That's where it ends. Equity 11.5%. Total liabilities 88.5%. So that adds up. So you can very quickly in Excel get your vertical analysis. I can do the same thing for the next column. I can now start doing relating income statements to balance sheets, calculating ratios. Take advantage of Excel. Excel is a tool. It's immensely powerful. You should not have to take a calculator manually and do all this stuff. I'm sorry. You should not have to worry about going in and ticking and tying and punching in a calculator. You should let Excel do the work for you. And I don't have to worry about that I miss, because I tell you, if I was doing a hand calculator, I'd screw up. I'd miss a number, I'd miss a decimal, I'd miss something, and I'd get a crazy number and I have to go back and say, where did this come from? By using Excel, take the tools that are available at your disposal. And Edgar is great by being able to give you this all these tabbed Excel spreadsheets. So that's where we're at. Any other questions as far as we go on the budgets? Wow. As I said, if you have any questions that come to mind, anything you want to talk about, I'm only a phone call or email away, or a Calendly appointment away. So feel free to take advantage of that.